Last time, you saw the real Forex market. Countries trading goods, banks settling trillions, central banks steering currencies, ownership changing hands, and you saw something else. You were not part of it. Today, we look at where retail traders actually are. Not in the market, but in a parallel system built on contracts, not currency. The broker machine. Why it eats you alive. The illusion of trading in a rigged world. The bridge. Stepping out of the shadows. Imagine you're standing at the edge of a vast ocean, watching colossal ships, nations and banks, sailing across it, exchanging treasures worth trillions. That's what we uncovered in the last video, the real Forex market, where countries trade goods, central banks steer currencies like JP Morgan or Deutsche Bank settling deals through SWIFT, and actual ownership changes hands. It's a world built on real movements, real economies. But here's the twist in our story. You weren't on those ships. You were never invited. Instead, you're in a small, murky pond nearby, thinking it's the ocean. Today, we step into that pond, the retail Forex world, and open the machine under the surface. It's not about bad luck or poor skills. It's a carefully engineered trap designed to consume you, one deposit at a time. Let's pull back the curtain. The true story of real Forex. Ownership and patience. Let's begin with a simple tale of what real currency trading looks like, far from the flashing screens. Picture yourself in Japan, holding a stack of yen. $1 equals 145 Japanese yen. You decide to exchange 1,450,000 yen for $10,000. Now, those dollars are yours. You own them, tucked away in a real wallet or bank account. Weeks turn into months. You wait, watching the world shift. Maybe Japan's economy stumbles under trade pressures or policy changes. Suddenly, $1 buys 165 yen. You convert back, and your $10,000 become 1,650,000 yen. That's a gain of 200,000 yen, about 10 to 15% profit. No charts, no frantic clicks, just ownership, patience, and real exchange. This is the Forex of banks and nations, slow, capital-intensive, done on a massive scale for real profits. It's like buying gold at a low price, holding it in your hand, and selling when the market rises. You have authority, delivery, and control. This is slow. This requires capital. And this is how the banks and nations trade. But in the retail world, that's where the illusion begins. The wallet illusion. CFDs and the bet you didn't see now shift the scene to your broker's platform. They lure you in with promises. Trade currencies like the pros. You deposit money, click buy USD/JPY, and feel the rush. But stop. Nothing real happens. No yen leaves a vault in Tokyo. No dollars arrive in your account. No bank settles a thing. What you get is a number on a screen, a position in their system. It's the wallet illusion. You think you're holding currency, like that gold bar or those dollars, but you're not. There's no ownership, no delivery, no authority to withdraw actual Forex. Instead, it's a CFD, a contract for difference. A fancy name for a bet between you and the broker on whether the price goes up or down. The volatility you trade is just their price feed, a digital echo of the real market. No real assets move. It's all mechanics in their contract. You put in money, but you're compelled to trade or lose it to fees. It's foolish, promising big wins without the power. Just like fake gold brokers who show you prices but never deliver the metal. This is the CFD reality, a vision of trading without the substance. Retail Forex is not currency exchange. It is a private betting contract against your broker. Peering into the machine. How brokers really work. To understand why this eats you, we need to follow the flow. In the real market, from video 2, countries and global banks like Citi, HSBC, or JP Morgan exchange via interbank systems. Retail traders? You're nothing in that flow. Your tiny orders don't ripple the ocean. Brokers claim to connect you to this market. They attract customers like you, taking your buy or sell orders. But here's the hidden architecture. They don't always pass them on. Imagine 100 traders buying USD over JPY and 100 selling. In a fair world like stocks through government-regulated banks, trades match, ownership transfers, and brokers earn commissions or spreads neutrally. But in retail Forex, no. Brokers replicate orders internally or with providers, but you get no ownership, just a bet. The broker always wins via spreads, commissions, or worse. They're connected to central banks, but your money funds their game. They let you trade freely at first, then sort you into books based on your behavior. Brokers sort clients into 3 paths: A book, B book, and the hybrid hunt. Enter the core of the machine: A book, B book, and hybrid models. A book, trades sent to real liquidity providers, institutions, large accounts, rare retail winners. In A book, your trade goes to real liquidity providers, the actual market. The broker buys or sells for you, earning a cut. Who gets here? Institutions, big accounts, consistent winners. They're dangerous because they might actually profit, so it's rare for retail folks. B book, trades kept inside. Broker takes the opposite side. B book is the dark heart, where most end up. Your trade stays in-house. If you buy USD/JPY, the broker sells against you. If you lose, they pocket everything. No commissions needed. They know you're likely a loser from patterns, so they trade opposite. You buy, they sell, betting on your failure. Mathematically, not emotionally. Most retail accounts go here, because predictable losers are revenue. Hybrid, losing traders to B-book, winning traders to A-book hybrid. Most brokers mix them. Small or losing accounts go B-book for easy income. Winners shift to A-book to avoid big payouts. This creates massive conflict of interest. They see your stops, clusters of retail orders like liquidity pools. With control over spreads, slippage, and execution delays, they hunt stops. A sudden spike wipes you out. Price snaps back. They blame volatility. It's targeted harvesting, legal and profitable. Losers stay internal. Winners are routed out. This is a built-in conflict of interest. The leverage lure. Accelerating your fall layer on leverage, the misused trap. Brokers promise, for $1, control $1,000 or even unlimited. You think it amplifies wins, but it's a high-speed death machine. At 1 to 500, a 0.2% move erases your account. It magnifies fear, errors, costs like swaps and losses. No skill survives. It accelerates ruin. Brokers make billions daily from this. Why 95% lose? The math. Spreads eat 1 to 2 pips per trade, commissions stack, swaps drain overnights, slippage steals, leverage multiplies mistakes. Negative expectancy ensures erosion. Psychological pressure cracks you. Brokers publish these stats, 70 to 90% losses, because the system isn't neutral, it's built to bleed accounts dry. Why it's haram, the economic poison exposed. Now let's unpack why this is haram, not as religious dogma, but pure economic and human destruction. Haram means something corrosive, corrupting society like poison. No culture or faith needed, it's mathematics and exposure. First, shimar, gambling. No goods move, no services created, no production. It's zero sum. You win, broker loses, you lose, broker wins. Charts, technical analysis, news-based or community trading, it's still hoping to beat odds, like a poker player analyzing cards but gambling at core. Under sheep's clothing, it's a wolf waiting to devour you alive. Gharar, deception and uncertainty. You think you're trading the market, but it's your broker. Hidden incentives, execution, structure, you don't know who's opposite, where trades go, how prices fill. Engineered fog, riba, exploitation through money breeding money, leverage, swaps, funding fees, debt on speculation without real activity. Money multiplies artificially, draining you. No value creation. Real markets feed cities, move oil, build factories, wealth grows. Retail Forex? Nothing moves. Wealth transfers from small accounts to brokers and providers. It's extraction, not creation. Governments allow it. Why ban when they tax you? Win or lose, tax brokers and insiders benefit. They have data first. A president like Trump plans tariffs on Japan, dollars flow out, yen falls. Insiders sell JPY early. You react to the speech, taking the wrong side. The insider edge and the human cost, a zero-sum nightmare. Picture the Fed chairman speaking, you wait for news. But politicians, governments, market makers, central banks know beforehand. They position. You provide liquidity by panicking wrong. You're outthinking nations forged in war, blood, greed. Impossible. If easy riches, why inequality? Why evil persists? Worse, the human toll. Retail is zero-sum gambling. Your $1,000 win means someone loses $1,000, plus brokers cut both ways. Influencers flaunt riches. They're broker-paid advertisers, selling poison while enjoying it. Would you drink? No. Contrast barter. I have rice, you have spices. We both agree to trade, both satisfied, value created. But here, you bet against unseen opponents, countries, insiders, victims like you. If the loser was your father, friend, would you want that blood-stained money born of cheating, cowardice, depression? No. You're not evil. You're innocent, locked in a cage by hope. The market's real, but it's a mass scam in a white suit, deceiving millions. The metaphor, trapped in the beast's belly. If you see the machine, you're a lamb in a factory. Deposit, entry, leverage, bait, costs drain, spikes hit, stops cut, margin calls finish. You blame bad trading. It's expected. A wolf in a suit sells freedom, but you're the product. Retail Forex, an extraction system wrapped in charts, sold as skill, powered by misunderstanding. You're in a rotten animal's stomach, digested by the system. You are not the trader. You are the product. The door opens. Toward escape retail Forex is not a market. It is a financial extraction system, wrapped in charts, sold as skill, powered by misunderstanding. In the next video, we'll discover what real alternatives look like, what actual investing is, how wealth is built, not transferred. But now, you know. If you're seeking the truth, like watching this, you won't want that corrupted money. In the next video, we escape the belly. We'll explore real alternatives, true investing, wealth built not transferred, foundations over flickers. Stop being bait, start owning. See you there.